Ever considered investing in commercial property, but you're scared about all the unknowns? Scott O'Neill from Rethink Investing busts some of the myths about commercial property investing with your investment property editor, Sarah Megginson.
That you can't get capital growth quickly out of it. So some of the fastest growing deals I've ever seen have been in commercial. Like I even had a property myself around the Newcastle area. It was a little warehouse. In 1 year it grew 26%. Now it grew that quick because basically the interest rates were dropping and I renegotiated a slightly better lease, and basically the market wanted to pay more than what I paid for it. So residential properties didn't grow that quick in that area over that time frame in 12, 13 months, which was a bit of a light bulb moment to go, look, you can create a lot of value from commercial. You've just got to do it through things like adding lettable area to it, or maybe extending leases or upping the rent. That all creates value. So that's a big myth that many of my first time investors come to me and say, oh, I want residential for the growth, but they're forgetting that commercial will also grow, but you're almost guaranteed to have better cash flow when the tenant's there compared to residential. So it can be the best of both worlds. Oh look, the long vacancy thing is one of them as well. So 100% you can buy the wrong property and have a long vacancy. And it goes, like the common stories you hear are like, the retail shop front in a regional area that, has been vacant for over a year or 2 years. The reason that's been vacant is it's probably a poor quality asset, or the owner's asking for too much money, or it's just not in demand because of a changing industry. So retail around sort of highways where there's not much foot traffic and the rent might be 100 grand a year for a tenant to pay, they're going to stay vacant because there's no solution for the business or customer. It's kind of a bit of a redundant property. But imagine applying the same concept to a small warehouse next to the airport. That's not going to sit vacant for 2 years if you're asking a fair rent and there's supplies under control. So, it is a myth that all properties will go vacant for a long time, but you just got to research your way into buying the good ones, which will have a tenant much quicker. And smaller tenancies or, in demand area, like, beachfront type properties, it's all about supply demand. And if you can find a property that, there's not much vacancy around and the rents are fair, and that's probably one that's not going to have that type of risk with it. Yeah, so one of the main things of growth is rental increases. So the value of commercial property, a lot of it's locked away in the rent value. So let's say you've got a property renting for $70,000 a year. At a 7% cap rate, that property is worth $1 million. Now, if your rent jumps up to $80,000, basically the rent's going to go in line with that price. So it'll be well over $1 million because the rent's more, because someone will still pay 7% on the rent. So if you can get rents up, that's a way of creating equity. So something that I always look for when possible is to find properties that are under rented, because then all you need to do, and you've got to obviously work with a tenant. You don't want to annoy them or push them out of their premises. You want them to pay the market rent long term. So there might be a 3-5 year plan just to increase the rent, or maybe if that tenant vacates, you can look for another tenant at the right rate. But the minute you do that, the minute you raise the rents, the minute you've got more equity, and valuers tend to actually honour that as well. You'll be able to actually get a fair valuation because it is very numerical as well, and that tends to sort of work quite well if you're looking to either refinance or sell down the track. Yeah, and I think they're probably even easier to find if you know where to look. So, same thing, strata titling is a big one. So you might buy, this is obviously for those who've got bigger budgets, you might be able to buy 4 warehouses or 4 shop fronts or a multiple office space type asset and then split it up and sell off individually. The more, as you sell at a lower price point, those investors have less selection, so they tend to pay more for the same rental value. So that means if you buy a complex at an 8% net yield, you might be able to sell each piece off at 7% to the lower point. So you can make equity just through making it more bite-sized. Another way is adding lettable area. So things like you might have a warehouse and you can add a mezzanine into it. So if you have a 80 square metre new office space inside, you technically can charge rent for that 80 square metres. So you've obviously got to account for costs such as counter contributions, build costs, all of the above, but long term it might make sense because you can charge for that rent, for that floor space forever. And the other side's lengthening leases or changing tenancy mixes. So where I've been involved in a large complex where we bought a shopping centre, and we're looking to get the percentage of medical in that centre up higher. So that might mean replacing a news agency with a dentist. People see a dentist as a higher quality asset or business, so they'll pay more for it. So you can create, it's the same floor space, same everything, same rent, but different tenancy mixes can be worth more to some people. Look, I think the main thing is just be open to it. It's funny coming, in my industry, it's all residential. That's the only thing you hear in the newspapers, magazines are talking about commercial more and more these days, but it's still such a fresh, unknown, unspoken about thing. But it's a major part of the Australian economy. And I think the more people, discuss it, the more that you'll realise there is actually very good quality deals to be had in every price range. And I think it's just, I think people need to sort of get involved in it more, and I wouldn't go out and buy 10 residential properties without considering commercial somewhere in there. So it's a diversity thing, it's a cash flow thing, and a lot of people need the cash flow to retire off because residential yields have compressed so much over the last few years. It's hard to generate an income from it. So by default, a lot of people will move to this side, but getting involved at an earlier age will just build their knowledge up, and I think they'll be better off for it.